Offices. Robert Frank put out his newsletter today on wealth, and he
what's it called so people can find it?
Okay,
sorry.
Put me on the message. Put me on the. But in it, he points
Frankly
out.
speaking.
Yeah.
Right.
In it, he points out that family offices, which have always overinvested in the United States, even the ones that are foreign-based, have pulled back in their investments in the United States to the tune of about 10% over the last several months alone. Now, I don't know if that's a longer-term issue. He points that out, too. How up-to-date are the FDI numbers, the foreign direct investment numbers, and when would we see something like that?
I think they're probably pretty lagged. That's the problem.
Yeah.
There's another thing which I'm working on for next week, which you've never heard of. $8 trillion of U.S. exports that nobody's ever heard of, that dwarf the exports. It's called U.S. foreign affiliate sales. The way American businesses have done business for decades. They go over there and they set up shop and they set up manufacturing. And that is potentially at danger here. Let me just make one more point. I know Rick wants in here, but
he does.
We are the largest exporter of corn in the world. He said that we can't sell our corn. We're the largest exporter. The other thing is, I'm sorry, Mr. Secretary, a VAT is not a tariff, is not a tax. When GM sends a car over to Europe, they pay a VAT. When BMW sells a car in Europe, they pay the same VAT. The VAT is not the reason that we are not competitive in Europe. Now, it is true that when they send a car here, the VAT is rebated. That's a different story that perhaps make them more competitive here. But we are not competitive in Europe because of the VAT. Period. End of story.
It is a tax, though. Value-added tax is what it's doing.
But it's the same tax that BMW pays.
Yeah.
Now, I guess there's a little bit of wedge
tax,
there.
Essentially?
What's that?
It's like a sales tax.
It's a sales tax. So we charge them a sales tax of 5% or 4% or 8% in New York. They charge 20%. That's how they fund their government. Do we have a right to say, by the way, whatever happened to the free market and all the decisions that have been made by companies about where and how to optimize their supply chains? The complaint about the Harris and the Biden administration was the intrusion.
Multinational corporations. They don't have an allegiance to the U.S. That's the heart of the problem in Trump's mind. Is the elite multinational corporations know no borders, the money goes everywhere, and the free trade globalism has been in reverse really since COVID. The problem is that the direction of that reversal was wrong. And maybe if Trump had a second term instead of Biden, instead of Vietnam and some of the alternate places that were extracted from China during COVID, maybe it would have come to the U.S. Maybe that would have helped Andrew's question of how long it's going to take for onshoring to occur. I'll tell you what, the structural issues of jiggering trade are not going to be easy. But in the end, once again, it comes to, I was doing Santelli exchanges on the end of globalism 10 years ago. The handwriting has been on the wall. Ultimately, if you live in the U.S. or you live in Europe or you live in China, ultimately what goes on at home is very important. And after World War II, when the United States was way up here economically and everybody else was in melting ruins, we created this structure. And the structure has outlived its usefulness in many ways. And to try to tweak
because we're the richest country in the world.
Shuts down for maintenance is not going to be. Wait, what did you say?
Because we're the richest country in the world. We came out of the pandemic faster. We had better growth. We are the most dynamic economy in the world.
Of money, and much of that money we spent was in debt. The debt was financed by foreigners.
Some of that money.
They enabled us, just like the Fed enabled us with those capital accounts. I'm saying there is a dark side to the trade deficits. In a different way, I think, than Trump looks at it. I look at it like it does underscore and underpin a type of financial behavior that in the long term hurts us.
41% of the S&P 500 firms' revenues come from abroad. That's according to Apollo. So if you're going to restructure that, it is going to, just to your point about them maybe not having allegiances necessarily to the United States, it is going to restructure that in a very large way if these tariffs stay in place.
And the real question is what happens, by the way, to their business in all those other countries.
Yeah, exactly.
I mean, that's the thing that I think is sort of being missed in this. Forget about the retaliatory tariffs. I just think that if There are consumers who are going to say, we don't want to do business with U.S. businesses. And I think with the services companies specifically, it gets even tougher.
We're the consumers of the world. That's the one thing Howard Lutnick was correct about, in my opinion. We're the consumers of the world.
He said
okay? If people want to make stuff and they don't want to sell it to us, woe be to them.
I'm confused because if people make a decision to buy something from abroad, isn't that part of the freedom and independence people have?
They don't make that decision.
Things?
They make the decision to buy what's cheap, and that's the problem. Okay,
that's
we're
going
to make it so it's not artificially cheap anymore. Every day, Kmart low prices had a dark side for the American economy.
No, but here's my question, Rick. What about all of the folks in China and India and other places who've been buying Nikes? Who've been buying Starbucks, who've been going to McDonald's.
Okay, why does Nike sell a pair of gym shoes for $200 and they have to make it in China where they pay people peanuts? It doesn't make sense from the get-go.
Wait, now you care about Chinese workers, Rick?
Build them over here. Okay?
Now you care about the Chinese workers.
We have people that make more money. We have benefits. We cost more to make stuff. But there's a reason for that.
Because people bring they buy something cheap and they have money to buy other things. That's how it works, Rick, over time. You want us to go back to the horse and buggy?
And that's why Trump's reversing it, because we have $37 trillion worth of how it works.
I'm confused, Rick. Is your problem the deficit or is your problem the trade deficit?
It's not easy to confuse. If we didn't have trade surpluses and we didn't have a Fed that left rates at zero, maybe the pain of overspending would have hit home much sooner.
Rick, if you don't have the trade deficit, then you won't, and everything gets manufactured here, you're not going to collect the revenue that you want, I think, from those tariffs.
I think Trump would be happy with that.
I think the people who used to talk about economic freedom are suddenly talking about something a little different. That there was a time when people were like...
I've never talked about economic freedom. I talked about I've never been a fan of globalism. Never.
But you're a fan of the government telling us where and how we can buy and how much we ought to pay for it and what kind of industries business ought to do and where Apple ought to source it. That's what you're in favor of, Rick.
That out of the station during FDR, pal.
What was that? Wait, you're going back to the 30s?
You know what? All of the highfalutin government telling us what to do, that's been around a lot longer than Trump's been in politics.
So Trump is just continuing and making it worse, Rick. Is that what you're saying?
No. Maybe what he's doing is lighting the firecracker that'll finally end it with a big pop.
But with more government intrusion into the decision-making of both consumers and businesses.
You know what? Let people buy things made in America, period.